of the global risk, the one that I'm more concerned about is the Chinese harder landing. I think that there is a slowdown in the Chinese economy, and the rebalancing from fixed investment to private consumption is occurring too slowly because the interest groups against that rebalancing are politically powerful, and as the President and Prime Minister have a goal of having 7.5% growth for the rest of the decade, if you're serious about rebalancing, you have to let growth to fall below 7%. So every time there is a slowdown of that growth, they do another round of credit-fueled fixed investment. That means more bad assets of the banking system and shadow banks, more NPLs, more bad investments, more bad liabilities of the private and public sector. So this year they're going to be barely able to grow 7%, that is below consensus, but that increases the probability of a harder landing with growth closer to 6% by next year or the following year, or even below 6%. That's not a true hard landing if you believe hard landing will be growth of 3-4% in China, but it's much harder landing, 6% or lower, than the 7.5% growth. This is the objective, the authorities, that is being priced in by the market. So that could be certainly a big surprise that would have global effects, because China is now the second largest economy in the world. It will have a significant additional impact downward side on commodity prices, further pushing down inflation in advanced economies.
But so just give me a sense, this is what, a 40% chance of a China hard landing that would also lead to deflation in Europe, or less percentage-wise?
Well, it depends what we mean by a hard landing. As I said, a true hard landing will be 4% growth. I think that's unlikely. A soft landing will be 7.5% growth. I believe that China could fall towards a growth rate of 6% or below in the next couple of years. That's a very bumpy landing for China, and will have an impact also on commodity prices and through variety of trade channels also on the global economy, and among other factors will be one of the factors that could push inflation further lower in the Eurozone. There are other factors, of course, that can affect inflation in the Eurozone, like a faltering recovery in the Eurozone.